Oil is known as a momentum instrument, meaning that it tends to continue the price action whenever it started it.
In general, how do you think risk management should be handled by traders?
Energy trading is very risky because of its volatility, regardless of whether it's oil or natural gas.
Speaking about volatility, what are some setup tips that you have for this oil uncertainty or volatility peaks that happen?
If you see any conflict or risk of conflict going on, so never leave position over the weekend.
You mentioned something in the beginning, about war premium. What exactly is it and how does it affect oil overall?
First of all, when the conflict evolves, supply might be suffering.
Let's move on to the charts. Let's check on what's happening on crude oil. Hello and thanks for joining us on another Exness Trading Talks episode. Last time we discussed the relationship between gold and interest rates, its role as a hedge, and some tips on how to manage volatile periods. This week we will talk about crude oil and geopolitical tensions, how it behaves in high-risk environment, what's the war premium, and a brief look at historical examples. You can get notified about our new episodes if you subscribe on our channel and turn on notifications. My name is Antreas, and today with us we have Stanislav Bernukhov to share his viewpoint on today's subject. Hello Stan, and thanks for having us.
Thank you, Andreas.
All right, so let's talk a little bit historically or some examples on how geopolitical risk in oil markets and how that affects the oil supply, let's say, overall.
All right, so the main pattern with oil, speaking of the war premiums and geopolitical situations, so first of all, there is a fear phase connected to conflicts, of course, because most of the oil countries, they are located in the Gulf region. Well, not all of them, but most of them. Then the reality phase, when actually the situation is resolved somehow, or at least there is expectation the situation will resolve, and prices go down. And there is a trend phase, the long-term dynamics, which depends on different factors, rather long-term demand rather than the war, but these short-term spikes connected to war premiums, they are pretty remarkable, but they become less dominant as we move with the 21st century. So examples are, for example, 1991, the Persian Gulf War, right? So it was going twice in the price when Iraq invaded Kuwait. So the Brent price was going to $40 per barrel. So then in 91, US had started this military operation. So, and the prices got back to 20. So a very typical pattern, right?
Yeah.
The classical example was in 2003, for example. Then we got Libya situation in 2011. So when there was a civil war and intervention of NATO, so also the supply was disrupted. So prices, I believe, were going towards $125, $127 per barrel. So it was the highest point since 2008, right? So pretty remarkable rally. So then after recovery, so the price stabilized around 100. Then we got US and Afghanistan. So after September 11th, so the oil price had gone from 27 to 31, so not twice like it was, for example, back then. And the latest one was the Russia-Ukraine situation. I believe it was 2022, when Brent was going from 90 towards 139-ish, something like that. So it was high for 14 years. So the Russia was pretty big producer of oil and remains to be. So that was a disruption. So prices then stabilized around 100. Now they are declining towards 60, basically.
You mentioned something in the beginning, about war premium. What exactly is it, and how does it affect oil overall?
Well, first of all, when the conflict evolves, so supply might be suffering. So the classical example, for example, when the Hormuz Gulf is blocked by Iran.
Yes.
So, and the tankers from Kuwait, they cannot cross the Gulf. So that's one example, and the amount of oil becomes smaller. So in this case, according to supply and demand laws, actually prices should go higher. So then it might be some damage to infrastructure when the war goes on. and things like that. So first of all, this is the delivery disruption, so infrastructure damage and things like that, basically.
So it's disruptions of supply chains,
of everything.
Yes, disruption of supply chain lines, of demand.
Exactly.
So this creates an imbalance, mainly in the price, which is then referred to as the word premium. All right. In general, how do you think risk management is handled by traders, or should be handled by traders? Not only in oil, but energy trading in general.
Energy trading is very risky because of its volatility, regardless of whether it's oil or natural gas. It might be risky, it might be extremely volatile. So, for example, if you see any conflict or risk of conflict going on, so never leave position over the weekend, because we've seen actually this year, we've seen the same pattern. So with situation with Israel and Iran, for example. So it was not a huge spike, by the way, but it was pretty modest growth in comparison to previous periods. It has gone, I believe, from 65 towards 76. But there are a couple of days when the market is opening after the weekend and it just, breaks the ceiling.
Yeah,
it gets higher because it's a tremendous disruption of the liquidity in the markets. It might be gap, or it might be the immediate big candlestick, which actually surpasses several levels or several group of levels.
Yeah.
So your stop loss in the normal market, I mean in the exchange traded market, might just not be triggered, or might be triggered by the peak of the price. In CFD markets, that depends on your provider, but generally, there might be some slippage here, and sometimes it might be pretty substantial.
Yeah, so big volatility, especially after weekends, tends to hit stop losses and
over the weekend.
Yes.
So risk.
So what are speaking about volatility? What are some setup tips that you have for this oil uncertainty or volatility peaks that happen not only over weekends, but whenever we have any new catalyst or events happening around the world?
Oil is known as a momentum instrument, meaning that it tends to continue the price action whenever it started it. So, for example, it might break this ceiling, break the level pretty quickly in comparison to currency pairs, for example, which tend to be rotational. Oil is a momentum-based instrument, so it can quickly go day by day, 1, 2, 3, 4, like the ball is rolling, and it might go higher. So if you position yourself inside of this momentum move, so your profit loss ratio might be pretty remarkable here. So fading the action, going against the action, on the other hand, might be risky in this case.
Yes.
But I think if you wait for a couple of days, several days, and you see the resolution of the situation, well, if you are patient enough, so you can still position the counter trend trade, which we've seen, by the way, this time in June 2025, when Donald Trump had, as he said, resolved the situation in Israel-Iran, right?
Yeah.
And we've seen the massive candlestick down, so the very big day down when oil had liquidated. But that depends on the overall trend, right? Because the situation was incorporated in the context of the declining trend, overall declining trend. So that's why it has quickly liquidated. Sometimes if it's incorporated inside of the rising trend, overall rising trend, so it might go up actually later on. So the reaction to the downside might be modest. So that depends on the overall analysis, overall context, and overall position of the price in the overall big trend.
And in this point, I wanted to remind our viewers that if you want to read about more tips or how to navigate these volatile periods of time when trading energy, you can click the link in our bio to read the full article about it. And you can also sign up to receive the newsletter with weekly reports on updates in the markets in general. All right, so let's move on to the charts. Let's check on what's happening on crude oil.
Yeah. So speaking of charts, so we obviously see some long-term trend, right, which is pushed down by for already a couple of years, starting from March 2022, so with a peak in June 2022. So this situation probably leads it below 60. I think that the best guess that you can make in this market is to see the energy forecast, the so-called short-term energy outlook from the Energy Administration of the United States. It publishes on a weekly basis. So it shows you the approximate track and the expected price, the fair price to the business. For example, now it's below 60, around 55 and 60-ish for the end of 2025. So I think that the oil perfectly fits this track this year. So there are no huge disruptions in supply and demand, no hurricanes, nothing like that that could disrupt the price. So everything falls into the perfect supply and demand equilibrium. So that's why if you don't see any disruptions, you can absolutely follow this guidance. But don't forget that now we have the hurricane season in the United States. For example, October, that's the most concerning month. So if we see anything in Mexican Gulf, they call American Gulf it now, but whatever. If there is any hurricane going on, so that will definitely disrupt the demand and supply situation. So we might see any spikes to the upside. So the situation might be broken.
All right. Thank you very much, Stan, for providing your views.
Thank you. Good luck.
And thank you for watching this until the end. In our next episode, we will discuss hidden signs on silver, gold, and natural gas. If you enjoyed this episode, don't forget to give us a like and subscribe to our channel for the upcoming episodes in this series.